Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't, so let's get started. So in this video, we're going over how to pick stocks for beginners, because sometimes some people shouldn't be investing in stocks for multiple reasons. This is kind of going into details of what to expect while looking into stocks. So let's go. So stock picking can be very profitable if you're successful with it. However, there are kind of two factors to getting or thinking of getting into stocks. And the first one is time. You need time to invest into looking into stocks. If you're one of those people that there's just always stuff going on, you feel like there's no time in your life to do much else, then stock picking might not be the best. Now, it could work out sometimes, other times not, of course, but you should put time and effort into picking good stocks and companies, especially if you're not interested. If you're not interested, then you're not really going to make the time to do any type or give any type of effort. Moving on to the second thing that you'll need is doing the research. This is what you'll be using the time for. You need research. You can't just look at a chart and just make a decision purely on the chart. Now, sometimes you can. That's kind of called technical analysis. You know, there's supports and resistance. You know, if a stock is down and usually it's at this other point, you could sometimes make profits that way, but it is more risky. So if you're interested in actually doing the research, looking into stocks and companies, going to the numbers, I'll be going into that in a little bit, and of course the time necessary. Now, if you're not interested, that doesn't necessarily mean you can't invest in the stock market. There are mutual funds and easier ways to go about it. However, picking individual stocks might not be the best one. Instead, just go with the market or a mutual fund, and you could still make good money, more than most, there. So how could you find stocks? There are tons of stocks out there, tons of companies. Where do you go? Well, you could find them off of the news, and I'm not talking like the news channel or any of that stuff. That's depressing stuff. I'm talking about, like, you could go the street. Jim Cramer's on that. He gives a lot of good information. There's Yahoo Finance. I get a lot of my information there. Wall Street Journal and a bunch of those types of things. Also videos. This YouTube channel goes into a bunch, and I'm liking it more and more with the financial community. Not only this channel, but there are so many other channels out there that look into this stuff. They're very interested. They love with like doing this type of stuff, and just getting different perspectives is sometimes a great thing. So different videos might have different stocks that they're looking at, so that could give you ideas. Different articles online could give you ideas. And something interesting that I sometimes use are holdings of maybe mutual funds or ETFs. So if you're interested in getting into a certain sector, or maybe like a small or mid-sized company base, you could look into an ETF that invests into them and look at their holdings. Now, just because they hold to that company doesn't mean that you should go into it, but it's just to get ideas from other investors. Hey, could that be a decent idea? And then you do the research, and if you like it, then you could get into it too. The next thing is, just because a stock went down or is down, you should not disregard it. I kind of used to do this in the beginning. If I was like watching a stock and it drops, I'm like, oh, that's not a good investment because it went down. In reality, that's the exact opposite. You should be even more interested because it's cheaper. Prioritize doing more research into down companies, and I'll give you an example why. Let's say we're talking about, I don't know, crispy chicken sandwiches, because I like crispy chicken sandwiches. So we see a sandwich for $15, and you like the sandwich, but the price of $15 might be a little high for you. Well, let's say if there's a sale or you have a coupon or something and it's down to $10. It's a lot more interested. You like the sandwich and you like the price. This might be a stupid example, but is a very important concept. You might like a company, but you might not like the stock. Another quick example, let's just assume that we knew some stock's valuation, like let's say Amazon. People say Amazon's overvalued. They're at like 1,700 now or something. But let's say we knew, however we knew, but let's say we knew it was worth 1,500. Why would you pay 1,700 when it's worth 15? So price plays a significant factor into a stock. You might love the company, might not like the price. And Jim Cramer says that you should invest in broken stocks, not broken companies. Now getting into some numbers and actually factors within the stock. First, I usually look at not necessarily the chart. I might just see like where they are. If they're down, it might be a little bit more interesting because that might be a buying opportunity. Then when I dive into the numbers, I usually go into the revenues. I like seeing revenues either increasing. I don't like seeing revenues staying the same or dropping. However, what I prioritize over revenue is net income. Companies could be making more and more money, but they might be losing more and more money over time. For example, Tesla. They're making more and more, but they're losing more and more at the same time. So if I'm seeing net income increase, that is very attractive. And net income and revenue are two separate things. An example is actually Boeing. Ticker symbol BA. I was looking at them recently and their revenue was actually declining. I'm like, that's interesting. But their net income is increasing. So that's why that's a good company. They might be making less. Well, they're taking in less, but they're making more. How do you do that one? Next factor is the balance sheet. I look at the assets and liabilities of the company. I see what kind of cash they have on hand, if they could make more investments, expand, if they have to pay down debt, if things go wrong, if they have money for their share buybacks, if they have cash to actually pay out their dividend, if you're looking into dividend stocks. If I look at dividend stocks, I look at their dividend yield and also their payout ratio, if it's actually sustainable. Sustainable being if they are paying out more in dividends than they're getting in, that's not good. I also look at price to earnings ratios. That kind of decides if it's more overvalued or undervalued. Of course, it changes through every stock, every industry and sector, but good to look at. And also forward PE. The regular PE looks at past performance, which is kind of a good indicator for the future, but an estimated what they could be making in the future is more interesting. So if all these are looking good, I like the company, I see if I like the stock, I check the charts. I see maybe past month, 6 months, year, and I see if it's down or up. If I'm seeing it just going up and up and up, I'm like, no, because that's more expensive than it has been. I find it less risky if you get in on the downturn. It could rebound and you make money off of that. So like we kind of said before, if a stock is down, makes it more attractive. And just keep an eye out. You don't have to take a swing at every opportunity. If you're watching a stock and it keeps going up and up and up, you might have missed that opportunity, but there are tons out there, so keep your eyes open. In my opinion, everything reverts back to the mean, so just because stocks are continuously going up doesn't mean that's the only way it could go. It could go back down to where it came from. And I keep educating myself more and more on this stuff. Now, those factors like revenue, net income, balance sheet, that could be like a quick thing. I don't invest in companies if they're like losing money. So that could be like a quick, if I see negative there, I don't really want to touch it, and then you move on. So then eventually you could get into, how much the revenue grew year over year and EPS growth and all that stuff. So definitely continue to educate yourself. Even looking at the management team, their websites, their actual business, to see if you like them. Now, earnings reports are very interesting. What earnings reports are? They release numbers to the public showing how they did. If their numbers went up, went down, guidance and everything. But how do I play earnings? Earnings usually make, depending on the company, huge ups or huge downs. I don't like investing before earnings because that's very, very difficult to predict which way that will move. It's basically a gamble because they could crush numbers. Their revenues and all these numbers could be great, but their guidance might be, originally their guidance might have been like 40%. But now it's like 30% and the stock gets destroyed, when in reality 30% is still good. So how I play earnings is that I don't, and I wait to see what the stock does. If it goes up after earnings, might possibly be a missed opportunity, but if it goes down, that makes it a lot more interesting. So those are kind of the basics of looking into stocks. Now, if you're not interested in that at all, that's okay. You don't necessarily have to go through this process. You can still invest in mutual funds, or if anything, I would suggest to anyone, index funds. You don't have to choose which stock. You invest in the whole damn economy. So if you guys have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. I am starting, when you leave a comment, I usually wait a day after the video is released, and I respond to it, or I pick one that might interest me, and I respond via Instagram with a video, and I'll give you a quick shout out if you want to do that. I think it's cool to connect with you guys. But thank you so much for watching. Don't forget to subscribe, and I'll see you in the next one.